piece of infrastructure that everybody needs to understand what it is and why it's important, we thought we would just do a one-on-one chat. So, Martin, thanks for being with us.
Absolute pleasure, Pat. Great to join in the session.
Fantastic. So, why don't we jump right in? Martin, tell us a little bit about yourself and give us a minute on what is Montis.
Certainly, thanks very much. First of all, 30 years in the industry of both a practitioner and an advisor. I've spent time with Capgemini, Ernst& Young, where we were setting up trading, clearing, settlement practices, working with all the major exchanges, clearing houses, and critically CSDs. Went over to Paris, where I had a team of 100 working for me. We were clearing 1.7 trillion euros a day across continental Europe. That was for LCH ClearNet. Back to London, where I was part of the management team running Crest, which was settling £2 trillion a day. Crest is Europe's largest CSD and part of Euroclear Group, which is Europe's largest international CSD group. And then to Ernst& Young for 7.5 years. So I was EMEA lead for exchanges and market infrastructure, working with the same people Capgemini, Ernst& Young had spent $7.5 billion buying about 15 years earlier. So a bit of a round robin trip, but it's all in the same space, market infrastructure through and through. I was asked by Graham Rodford of Archax to write a business plan for a digital CSD he wanted to build. And 2.5 years ago, I was asked to implement that business plan and to set up a digital CSD. So I'm very happy, if you want me, Pat, just to mention briefly what a CSD is and why we need it. So
Yeah,
a,
please.
great. A CSD has three main functions, one of which is mandatory. The first function is as a notary service. And what that means is we are the books and records for the issuance of securities. If you want to issue 100 million tokens, securities tokens, or in the conventional world, a conventional security or a bond, you need to know that there's 100 million in existence, no more, no less, that no one's putting in counterfeit, no one's taking them out of the market, that from an issuer's point of view, you know there is always that amount that have been issued in circulation. That's the first piece. Second, and that, of course, from our side, building it on a blockchain becomes our golden record. At the end of the flow is the corporate actions work, where we look after the life cycle management. That's coupon payments, dividend payments, proxy voting, AGM minutes, or distribution for voting. Anything that's to do with the corporate actions, stock splits, dividends, we deal with that side as well. The one in the middle is the one that is mandated to CSDs and why we exist. And that one is around security, a settlement finality. A CSD sits above insolvency law, and anything that settles in a CSD is exempt or sits above any insolvency between the counterparties. And our job is to transfer the legal ownership of the asset and the legal ownership of the cash to pay for it between the two parties. Sounds simple, but you try and do it with several trillion dollars of transactions a day, 600,000 to 1 million transactions settling a day, it becomes very complex. But the reality is our job is to move the ownership of the cash and the asset from one to the other. Why does it matter? Sorry, just very quickly, why does it matter? If you haven't got it issued onto a CSD, therefore you haven't got that level of protection involved, you can't trade it on a secondary market. Over to you, Pat.
And now talk to us about in the traditional CSD market, right? So not this digital CSD that you're building, right? And we'll talk about that. But as we say, the traditional CSD market, what markets does it touch? There's a lot of markets that are exempt that act as their own transfer agents, for private corporations, et cetera, particularly here in the United States. Talk to us about where does the CSD live and kind of where are the boundaries? Because there's also a lot of, not only notary function as you described and finality of settlement, but also there's corporate lending, how you make a two-way market, et cetera. There's a lot of functions that CSDs have historically provided.
Exactly, and it's different demarcation line in different countries. So as you rightly say, in the US, certain things are mandatory for a transfer agent to be involved in, and you don't need a CSD. I think if you go to Hong Kong as well, the transfer agent does more of the role than the CSD, but the CSD is still required out there. And where it comes down to a private market, and that's why we're looking at how we can assist with the liquidity of private markets. If you've got, as Montis has privately owned and issued equity. Now, we don't have to have that issued onto a CSD. We can move it between a small number of owners on a private basis. But what we can't do is we can't, and think of us as an issuer in that instance, we can't get out to the much broader, deeper liquid capital markets. So for us, if we were trying to establish what's the price of a Montis equity, and if we're not traded on a secondary market, if we're not going where they're highly liquid, then we're actually in a position which is quite constrained in terms of what we can do, who we can do it with, and what access we've got to those markets. In terms of instruments, I've talked there briefly about equity, but if you think about it, from anyone from a corporate bond who wants to access a liquid market, you need to get onto those that are secondary listed. And from our side, the conventional way of doing it actually has a lot of intermediaries who perform certain important functions, but there's a whole bunch of activities like reconciliation, which have got no place because they don't add any value. So from the actors, you have got, as you rightly say, you've got different markets in different countries working in subtly different ways, and each market convention is not consistent across the board. And we're looking at it from the point of view, if we can give that access on a tokenized basis, we can remove a number of those uh, inefficient and also valueless activities which currently have to go on because of the way that the market has evolved. And for our side, we're looking very much that the digital asset, which could be the same as the underlying security, will be a tenth of the cost to process post-trade.
And if we think about this traditional CSD and this new digital CSD, I want you to describe a little bit about that. But before you do, I want to highlight one of your points about finality, especially sitting above the insolvency laws. In a bankruptcy, if there's a trade that's done in a dark pool, that can be clawed back, right? If that trade is held in street name between two parties. So if you're trading on Deutsche Bank or Goldman's private market pools, you go into insolvency, you can pull that back. But if you do that through a registered exchange, there is finality to that trade. And this finality matters, particularly as you think about real world assets and creditors when you're using real world assets that live in a tokenized form as a form of collateral or valuing collateral or posting collateral. And so as we talk about two things, number one, what does this digital CSD actually look like? Because a lot of the functions that a CSD traditionally does, people have said are going to be done by smart contracts historically, right, in the last 6, 7 years. But many of those functions, from a regulatory standpoint, need an intermediate player taking on the function, the fiduciary function of that thing, which can be done programmatically. And is that what a digital CSD is? Or maybe I'll let you put it in your own words.
No, I think you're very much in the same place that I am, but I see this as steps to a journey. So let's take the first step of the journey. Um, we've got conventional securities, and Montis is applying to get its CSD license in Luxembourg. We will be able to support conventional securities, but so what? Because those already exist. In the US, you've got one CSD that handles that called DTCC. Over here in Europe, we have 39 that do it. So don't ask me why, but every member state seems to feel they should have at least one. From a market perspective, We're not trying to replace those. We're looking at it saying there's different forms that that security can take, as well as conventional, which is dematerialized typically, although I'm sure my mother still has some Vodafone or some British Gas or some British Telecom shares under the mattress, but those are typically dematerialized and they're caught up in the historic way that conventional securities have to be dealt with. We've got two aspects, two new forms that we're focusing on there. The first is as a CSD, if we have links to other CSDs, we can actually have an account there and immobilize those securities and tokenize them. And that's called a non-native digital token. And that's the first that we'd be working with. The second one that we'd be working with there is very much around the natively digital. This is where the only instance of the existence of that security is on the blockchain that we, the CSD, are operating. And you start saying, whoa, that might be dangerous. Well, it isn't, because first of all, it gets issued onto that blockchain, and all our participants have a wallet onto that blockchain and can see its existence. So if there's any disruption to service, all of the information around the integrity of those securities existing, and each participant, whether that's a financial institution like a Citibank or a JP Morgan or someone like that, they've got complete access to all their portfolio, whether it's an omnibus account or segregated, inside their firewall. So they've got all that information. So it's much more resilient. But that form of a natively digital security is very efficiently created because you're creating one digital record. Everybody can see it, who is permissioned to see it, and you have no reconciliation. You've all got the same golden source. And what's really interesting to us is that if you start trying to apply the natively digital tokens in a private market, you start saying, well, if I've got my pre-issuance platform, something like an Agora or a Now CM or an Origin, Agora, for example, retain all of the origination information, including the syndicate banks, notes, spreadsheets, calls, lawyers' notes, and everything else on their blockchain as a golden record. Inveniam is providing all of that additional information that sits around it so that you've got true value, credentialized information, structured data, and we've got the golden record of the instrument. From then on, everybody has got complete transparency and openness around the information, and it transacts and it moves extremely efficiently because you've removed all the zero value activities that go on.
So you guys are going to be both an operator in some cases of the compute function on chain with a wallet that might be instigating a function, as well as the oracle of record, so to speak. Is that right? Informing systems as far as what is on record that they might be able to see with their own wallet anyway. Is that a fair statement?
That's exactly right. And in fact, your financial institution or whoever is a participant can then say the golden source record sits on the Montis CSD and it's a private CSD. We are the only people who validate in it. And the reason we do that is so that there is legal certainty around what is being settled. Really important here that if there's any dispute, that the courts know exactly which jurisdiction the trade was settled in. So therefore, they know exactly what laws apply against that dispute. So that gives certainty to the market. But at the same time, you could choose to hold your digital securities. You could choose to hold them in Algorand or Hedera or Corda's R3's Corda, or you could have it in Tezos. You have it on Ethereum. We can move it for you, or you can say, I want to move it from one wallet to another wallet on permissioned private and public networks whilst having the golden source protected at the CSD. This is the first step. When we've got to that stage, technology already allows us to do it, and financial innovation would allow us to do it, but the regulations don't. At that stage, you then move up a level and you actually say, If JP Morgan and Citi hit a trade, one's on Algorand and the other's on Tezos or Corda, the cogs of a wheel turning that trade updates our ledger immediately. So simultaneously, everything gets updated as at the instant of the trade. And that's a fundamentally paradigm shift from where we are today. But we have
And
to go through those steps to get there.
yeah, and this is for all of those who are watching. This is fundamentally what Vitalik was writing about when he was talking about moving from a cross-chain world to a multi-chain world. And in a multi-chain world, you need a master smart contract or a master ledger that then can push instances of those tokens onto multiple chains, right? And that's what Montis is going to do in this multi-chain reality. And now, Martin, do you guys have? I know that a couple different chains invested into you, right? And you have relationships also through Archax
Yep.
to some other chains. But are you at Inveniam we say we're chain agnostic and chain promiscuous, right? Tell me about what your view on this is. Do you have any views about public versus private chains and how you want to interact with them or not interact with them?
Uh, we do have some views on here to share. The first of all is to be very clear that our blockchain network is a private network because the legality of what we're needing to give certainty to a market participants dictates that that's the only way that we could have absolute certainty from that part of the law. But in terms of then reaching out and saying, but we can now interact and have interoperability between the different networks. We've worked with a company called Delta Capita, and in fact, we've created with them, or they've created, and we've joined an SPV to actually develop DLT technology that interacts between multiple different chains. In our case, we're already being set up so that we can interface directly with Algorand and Hedera and Ethereum. We have the ability also through the technology of Delta Capita's acquired to add Corda 4.8 to have Hyperledger Bezu, Hyperledger Fabric, um, and there's one more which has slipped my mind. But from those perspectives, we can already have that connectivity to move tokens between those different wallets. To us, we now look at it and say, if you're in a regulated market that says you can only operate on private blockchains, that's absolutely fine. You can stay on ours. And in fact, the Delta Capita blockchain is the final one that I'd forgotten to mention, their own blockchain. So you can stay on ours, which is private. You can connect from ours to Corda, which is private, or we can have permissioned inside the other networks. What's interesting in addition to that is, as you know, Pat, you can permission the token as well. So it's one of the things that's not so often understood at the regulatory and legal level is you can permission that token as well as the network it sits on. And that's the world that we're preparing for, the world that actually has both.
And there's a lot of standards out there, and uh, these jurisdictional issues matter very much, right? That as you want to interface with regulated entities and they want private markets to exist in a tokenized form so that you can be a regulated player, people are going to need to work with CSDs in different jurisdictions. Some will be exempt from the obligation to use CSD, some will not. But you guys started in the UK and you started out of Archex. I want to get to standards in a minute, but let's talk a little bit about your origins, right? You mentioned that you started with Archex, and you have why don't you tell us a little bit about Archex, who they are, your foundation in the UK regulatory sandbox, and then what you're looking at in Luxembourg right now.
Yeah, absolutely. So our foundations are from Archax, which is an FCA, and it's the first ever FCA permissioned MTF broker and custodian for digital securities.
And Martin, just real quick, an MTF is equivalent to an ATS in the US, right? Why don't you kind of go just for the sake of the acronyms? We have people who typically watch from Asia and India, Australia, US. We get messages from everywhere, but can you speak those acronyms into full existence?
Absolutely, absolutely. So you could have had ATS, ECN, or MTF. So what it is, it's a trading venue, same as an exchange. It's the place that you go to discover the price to buy and sell something. So from a
Perfect.
perspective of Archax, the first thing they did was they said, in the crypto world, you can use your smartphone and you can trade on a from your MetaMask wallet or anything like that. So from an Archax perspective, they saw this coming in with the digitalization of financial markets and have built an MTF, that's a trading venue, which is the place that you go to buy and sell securities. And if it's an MTF, then they're regulated securities, as opposed to our checks are also setting up and have got actually operational in now a crypto exchange as well. So from that point of view, you can have regulated instruments traded through Archax, or you could have unregulated crypto traded through Archax. Different businesses, different set aside as you'd expect. They're also a custodian. Custodian holds the securities in safekeeping and safe custody for the investors, and they typically go into a nominee account, which is an omnibus account normally, so that multiple different investors can have their securities held in a nominee account. The final thing they've got is they've got a broker license, which means obviously they can broker for additional business coming forward. What they lacked was access to the infrastructure to settle. And when they approached the incumbents, for wanting to concentrate on today's conventional business, were extremely slow and one could say reluctant to provide access to Archax. So much so that the frustration got to Graham Rodford and the founders of Archax, and they asked me to come and design, build, and then get authorization for a CSD that supports digital securities, knowing full well we can also support the conventional. So if we can do it on a digital basis in due time, we will also look to take over large amounts of the conventional business, but that's not why we're being set up. So Archax set us up. They're the majority shareholder, but not exclusive. And they've dictated that we have to be agnostic on trading venue. So although Archax has got a trading venue, a place for you to discover the price, we actually are in discussions with many other stock exchanges and MTFs, so trading venues, to connect. And it's part of my objectives that the board have given me that we have to have multiple venues connecting to us so that people can buy and sell on regulated markets and settle through us.
And,
In
and
due,
so
yep,
I'm sorry, I didn't mean to, in due course, and I didn't mean to cut you off there, but you were birthed out of the UK regulatory sandbox, yet you're seeking the full license in Luxembourg. Tell us about that, and what drew you to Luxembourg? What is the regulation there, and why the interest in anchoring in Luxembourg?
certainly. So first of all, London and UK is one of the largest cross-border markets in the world. If not, it is the largest. It's also the largest in many others. And we looked at that and said, but legally, can we record a security onto a blockchain? Can we transfer it? Can we hold it? Can we settle it? And there was a very strong opinion that you couldn't. Going back to the laws we had 2,000 years ago from the Romans, which is the law of property and law of possession, there was a strong opinion at the time that you couldn't. So we looked and said, could we do it in Gibraltar, which is British overseas territory, and could we access London through Gibraltar, which you can do, but they didn't have the laws in place for a CSD, so we couldn't do that. But we did work with DLA Piper as the law firm, who worked with us closely in the FCA's regulated sandbox to actually prove the regulatory technology that they were looking at to streamline and make it easier for private markets to access the secondary market of an Archax. And we created Montis shares, which have a token issuance agreement, which means under English law, we've been able to tokenize our own equity. So there are already now 53 million Montis tokens held at Archax nominee in a Hedera wallet. And there's a further 1 million convertible loan notes, which are also held in tokenized form, because we believed it so much that we worked with the law firms to find a way to do it. But we looked and said the law doesn't allow currently for that to be a sustainable model for the scale of a CSD. The laws are changing and the interpretation of the law is changing. So that's something you may see us do very shortly in terms of the UK. But we had to move quickly, and we looked and we said, we looked at the laws of France and Germany, because France had a CSD run on a blockchain called ID2S. So they had some laws in place. We looked at the laws in Germany and we looked elsewhere. Singapore particularly is quite favorable at the moment. But in Luxembourg passed a series of laws, first about dematerializing securities, and then 3 laws around blockchain, particularly with the ability to record, hold, transfer, settle securities digitally, non-native and native. And for that reason, May last year, we started our application to become a full CSD for all suite of securities under Luxembourg law, using the European Union's CSDR regulation and connecting to the European Central Bank. So it's mainstream we've gone for, and the laws of Luxembourg support us for doing all of that, with the single exception that we're still waiting for the cash on chain aspect to come in. So at the moment, we have to go to the payment rails of the central bank, but we're on the working group with the central bank to help design and put forward recommendations how we can bring cash on chain for central bank money. Exciting
Yeah,
times, Pat.
very exciting times. And as we think about, um, uh, there's a whole discussion around value on chain and deposit tokens and the liability network and what exists, and then both the benefit and the very real surveillance function by the state. That is a big issue that really violently wars against the origins of blockchain in general, right? And so how value and the DVP versus DVD leg of that trade, right? The cash leg of the trade
Yep.
gets solved is, I think we're going to work out over time. But as we think about regulated private market funds and regulated private market funds that are going to get marks by third parties, so the GP isn't setting them, they can trade. What are those going to look like? How do those get unitized? How do those get transferred? How do those sit in defined contribution plans as well as defined benefit plans? We must have central securities depositories that are digital, as these exist digitally, and they get traded globally. And we've done a lot. Last week we had the unified regulator from India on our webinar. That was fantastic, as well as the first person to tokenize real estate in India was on our with Sanjay Vatsa, our president. And there's a lot of people pushing at this. Opera this past week said that every private market asset owned by superannuation fund in Australia needs a third party mark. So we're starting to see this push, and that demands either an army of 10 finger automation or actual automation, right? And digitization in order to support that multi-party workflow, not only taking and ingesting the data, but processing it through multiple people, having reconciliation, being able to inform that instrument that sits in the superannuation fund. So the need for you is going to be global, and the infrastructure that you're creating, if we're going to be dealing with these regulated markets that need to exist in things such as superannuation funds, right? In uh, uh, these uh, AIF funds in India,
Yep. Yep.
and And as we look at this in Europe, and you've gone to Luxembourg, tell us a little bit about how you will, is this a Luxembourg domiciled reality that will passport across all of Europe with ESMA overseeing your work, or what does that look like? So you start in Luxembourg, and what does that license do for you? Where does that go? And then what does that mean for private markets that want the promise that you are seeking to deliver?
No, certainly. So let's look at the jurisdiction one first. It's down to the regulator to determine that they will or won't authorize us, but let's work on the basis that towards the end of this year, we potentially could be regulated by both CSSF and the Central Bank of Luxembourg. What that allows us to do is to start, and that would be with our opening gambit of bonds, funds, and equity, although most people would know that Luxembourg is not a big equity market, but it is huge for bonds and huge for funds. Um, we're focusing there first because, as you may recall, Pat, when Archax did their Series A raise and got $28.5 million, the big strategic investor in there is Aberdeen. And when we talk with the Aberdeens, we talk with the Fidelities, we talk with all the major players on the global asset management side, and they've all got big Luxembourg domiciled funds that they're trying to establish. How are they going to tokenize? How's it going to work? What can they do? So from our side, it was a very, very logical side to start with big asset management firms who are going to tokenize, and it goes on from there. You then start saying, well, hey, what about the rest of the European Union? There's 26 other member states that we can support. First, by accessing Target 2, the European Central Bank's real-time gross settlement system, we can support anything in a euro settlement, so euro denominated. By being within the European Union, that extends us out then to go to all 27 member states. That's Luxembourg and the other 26. We also can settle transactions from London. So our first trading venue is actually Archax MTF here in London, where we'd be looking to have settlement straight through to Montis operating in Luxembourg. So that gives us the scale in terms of being a European Union operator, but able to support beyond the European Union. Our perspective behind that is actually saying, but at the same time, what about providing access to the private markets who want to come on board? And that's where we've worked very closely with the pre-issuance platforms, and where we're working with the law firms. And we're also working with a number of the participants, people like AIFs, people like depositories and so on, around how they're reaching out to potential markets to bring them in. So from our side, the ability to create a real estate security portfolio, have it wrapped into a securities wrapper so we can then actually settle it. We're working with the firms who are on the buy side are actually starting to create those products and look at how they can do those in scale.
And tell us, when you think about that, what will that look like initially? And let's stay with real estate even just for a few moments, right? Are these interval funds that would be trading once a month with a redemption, and then if there's too much of a run on a redemption, it has open trading? Or is this going to be something that's going to trade daily for 8 hours a day, right? What does this look like? In what are the types of funds that are showing the interest in working with you?
Right. Well, there's a whole range in there. And ultimately, the types of funds we're seeing are from money market funds right through to ETFs. And where we're starting, and this comes to your point around what about access? What about what's the velocity, and also what is the time period in which these can be bought and sold? We're looking at how we could move to a 24/7 service for ETFs. Now that means that your AP sitting there, your approved person is sitting there as a market maker saying, I see that this ETF is out of the market. there's additional demand coming in. It could be Sunday, the demand could be coming in from Asia Pac. Is it possible to actually have a the issuance to include a number of uncirculated ETFs, which are held by Montis as a CSD? And what we're exploring at the moment is the way that the AP, the approved person, participant, sorry, should be able to send an instruction to us under a power of attorney saying there's either oversupply or there's undersupply, either redeem or distribute and issue more. And we could do that on a 24/7 basis. We're working on it at the moment with the issuers and with their agents and with other intermediaries, because the dilemma there is how do you make sure that you've got the cash leg also in tune. So we're looking and seeing how we can actually do that. That's where we're seeing demand. We're seeing demand also for existing funds and how they can be tokenized, because it's seen that a large percentage of the new investor base actually wants to be able to take something which is traditionally hold to maturity, but actually they want to be able to trade this on a secondary market. They want to be in and out. They want the immediacy that you get from your smartphone if you're dealing in your MetaMask wallet, in crypto outside the regulated market. They want that inside the regulated market, and that's where we're seeing the demand coming from. Similarly, the institutional investors are saying, I've got big portfolios, I want to be able to tokenize those so that actually it's much more efficient and I've got a much lower cost base that I'm operating at.
And when we think about particularly the institutional space, where Evercore is kind of the leading player in matching the secondary trading away from finding a new buyer for a limited
Mhm.
partnership interest in a lot of these private equity funds, right? And whether it's an infrastructure, private credit, private equity, a large real estate fund that is illiquid. And or you have somebody who's playing on an information asymmetry situation where they're just buying for their own book and they're leveraging that information asymmetry, right? As we think about that going, and these LPs can trade in a secondary market where there is information symmetry, but that information is not minute by minute. It is quarterly, it is monthly that those updates happen where there's the marks, and then you can trade in that. Talk to us about a CSD for those types of kind of moving from an asset that would trade once every 7 years or by appointment only, but or to regulated pieces, right? Because an ETF has much greater liquidity than, let's say, a piece of the shard, right? Like you own the
Yeah.
Mez piece of the shard. I want to trade that. I'm getting a quarterly valuation. I want to find the right buyer for that. How would that work using your type of a function pushing on into an ATS, or are you not on focused on that kind of intermediate trading function?
We're seeing that developing, and the way we're seeing that developing is actually that you come up with an additional capacity to fragment the underlying security. It may be that it's a security that is only revalued on a quarterly basis. That's the only time you get the verification as to what it's priced at. But we've got to look from a CSD perspective. If we're holding it, there needs to be a mechanism by which we can actually identify the day by day, the end of day pricing that would be applied to the fractionalization of that part of the asset, which, to be perfectly honest, we see being much more tradable in terms of people having just available funds. So, for example, when your pay gets sent in to your bank, you logically could say, actually, each month I want to have X amount of money going off and buying a fraction of a particular asset that I want. And it could be one that, as you rightly say, it's only actually priced over a long period, over big periods of time. The complexity that we've got, and this is why we're working with the lawyers and with the market, is actually how can we apply sufficient valuation to it that enables us to say we can hold it, because our fee structure in the early days is going to be on a basis point, we need to be able to understand what is the valuation of that at each step, and also for the holder, what's the valuation they've got. Jury's still open as to exactly how we're going to do that. I'd rather not go into too much detail quite yet. Very happy to share it with you on a subsequent call, Pat, or even when you're next over in London. But there's work being done on it at the moment, because that's where you have additional demand coming in.
Yeah, it absolutely, and the ability for people to have that as a core store of value instead of a checking account, right? Where
Yeah,
they're getting hedge fund like enterprise risk, yet they're getting a return that is not commensurate, right? By keeping money in a checking account, and I
yeah,
think we're seeing a lot of people look for that. And Wisdom Tree is, I think they're in 22 states with a lot of really cool solutions that are here in the U.S. So talk to us, and I would like to say this out on LinkedIn. If there are any comments, please feel free to type them in, and we'll go ahead and begin to answer them. But talk to us about next steps, immediate next steps. You got to get some approvals between now and the end of the year. You're going to be raising some capital to get your regulatory capital to the place that it needs to be. And then when do you anticipate going live? What are next steps? Kind of talk to us a little bit about your roadmap.
yeah, certainly very happy to do that. I think taking them one at a time, the minimum viable product will be finished in September, and we'll go through the UAT testing of that by the end of October. That's from our own perspective. We are dealing with a number of globally systemic banks and also other intermediaries around the development of that, and also then subsequently the testing of it. That has to go in line with our authorization application, which we anticipate, again, with the caveat that it's not down to us, it's down to us satisfying the regulator. We're anticipating we'll get the completed file by the end of the third quarter, beginning of the fourth quarter, hopefully end of the third quarter, which means that we can then anticipate getting authorization at the end of the year. It does take time. The key bit to us is actually that when we've got the completed file, which means that everything is then passed up to the European Central Bank for their general counsel and for all the other member states to consider the application to join Target 2 for payments, because this is an important step. At that stage, we expect to be granted the BIC code for Swift, so we can complete the Swift testing. So everything is geared up so that at the end of the year, we could be ready to go live, switch on the service for a corporate bond service that also supports funds and equities. What that means is today we're halfway through, we're getting closer to the end of our convertible loan note fundraise, which was raising 1.75 million. And so we're less than $1 million left that we're raising. And that's to allow us to complete the application and start staffing up, because as you would expect, we need, and we've already been interviewing staff in Luxembourg as well as here in London. That gets us to the end of the year. We're working with a small number of banks around a potential bank consortia for the equity raise, which is the one that gives us our regulatory capital and our 18-month to 2-year runway. And we're expecting that to happen at the turn of the year, because that's the point at which we then have to put our reg cap on the table so we can go operationally live. So it's CLN now, reg cap at the end, systems build in September, authorization maybe just into the fourth quarter. And at that point, we're then into saying, right, what about Montis version 1.1, 1.2? What about structured products? What about warrants? What about repos? Where's the rest of it going to develop? At the same time, what about applying into other jurisdictions? So it's really exciting times. We're seeing the laws in other jurisdictions are improving to the point we can apply. And once we've got a Luxembourg level quality CSD application in, and the systems at that level, actually that's the level which is the gold standard in that's accepted in other countries as well.
And so as we think about this and Montis 1.0 is live and you're trading, who will be the early adopters, early users? We've talked a little bit about the large funds that are leaning digital, but where are the markets that you're going to see that take off? But the second half of that question is, what are the markets that you're going to transform? Meaning, where are you going to take CSD functionality and liquidity and capability into markets that have traditionally not seen that type of liquidity?
The first one, and it's when you talk about the type of liquidity, it's also the ease of getting into the market and operating in the market. That goes with it. The efficiency gain that goes in it, the synchronicity of the data that's in it. Um, that comes from us looking at the bond markets and us looking at the fund market. So from the bond market, we're already teamed up. We're collaborating with Agora, who are the pre-issuance platform, so that we can then start looking at a full end-to-end life cycle automation of bonds. That to us, we've seen that the ICSDs, the international CSDs like Clearstream and Euroclear Bank, will always talk about straight through processing and the automation, but that's at a different level. That's everything is sent to the ICSD. They do the internal processing, and it's still quite clunky as a process. No disrespect to them. I used to work for Euroclear, and I've worked with Clearstream, but it's clunky. It's old style based on old tech, most of which CSD tech is more than 20 years old. What we're looking at here is the ability to put things which are, when we talk about seamless, we're talking about it's instantaneous and it's available to the market from that point. It's a single source of truth. You've got synchronicity of the data in there, and you've got the fact that all that data is immediately available, including, for example, on a bond, an early release of the ISIN number, so that it benefits the issuer and the intermediaries at the origination stage. There are many different bits that we can improve. Other pieces, I mentioned about a 24/7 service for funds. Well, that really starts to take it into what I'd call the industrial revolution. The fact that anyone, you and I can sit at a table and we can trade, we can settle immediately, but most importantly, it hasn't gone on to traditional rails. This is live, this is out there, this is, you actually now have the cash or you have the security and you can repo it out. We're seeing you can then sweat your asset more, you can do a lot more with what you've got. The other bit you then do is you start bringing in additional asset classes. So you start saying, what about my real estate? What about the fact that I can fractionalize what I've got? You'll still have the ability, if you're only allowed to provide something from a regulatory standpoint to a professional investor, to stick a price on it that says you can't fractionalize to a level where it means that you're potentially selling it to non-professional investors. You can still do that. Technology allows it. But what we're really doing is we're saying we're opening up and democratizing financial markets whilst delivering to the intermediaries the efficiency gain that they can pass on to the end user, and bringing the investor and the issuer much closer together in terms of the life cycle they're dealing with, and settling it atomically in due course.
Yeah, we were speaking of some of them are using a little bit older technology. I've used this example before, but we were speaking to the CTO of a public company, and he remarked that if he's going to do a task repeatedly, his goal is to uh, begin with a green screen. And he was not
Some
saying
still
that
have them.
jokingly.
Yep.
Yeah, and that's a shock, right? We have two projects that we are working with, scoping out um, that literally there's an environment that is not supported by any active software, that we have to create a virtual environment for it to continue to run in, because they're so afraid to pull the data out and they don't know how they're going to continue to meet their fiduciary obligations on technology that in some cases is well older than 40 years old. So
Yep.
this is an issue, right? How do we evolve to the next market infrastructure regime? So
Can I
it's
just
super.
pick up on
Yeah.
one there, Pat? Because we talked about standards, if I may. I think the first thing we're able to do is come in and we're using the ISO 20022 standard from the beginning, whereas certain CSDs have got proprietary protocols and so on. And the other bit on the tokenization, because Archax and Montis have both launched a tokenizer which can do HTS Hedera fungible tokens. That's what our own equities tokenized in. We can do ASA for Algorand, ERC20, 721, Polkadot, fungible and non-fungible. But one of the interesting things is, as a market, we need to start getting together. And in our case, we've also joined with Archax the ERC 3643 ecosystem working group to try and standardize the tokens, because we have a chance here to really harmonize the industry the way the industry did around FIX, the way the industry has done around some other standards. And we even see that certain central banks experimenting with ERC 1155s because it gives fungible and non-fungible. These are some of the other intermediate steps that we're pushing on. And as a CSD, we hope to be one of the leaders in helping get that benefit through to the market. Sorry, Pat, you were going to take me somewhere else.
No, I think that that's fantastic. This has been great. The role you're playing is incredibly important. We need it for the regulated markets and regulated products to interface. And as we deal with private markets being tokenized, Inveniam, as you know, we're in the data rich, lower frequency trading assets, infrastructure, real estate, private equity, private credit. And as we are seeing enormous gains in efficiency in administering those assets, we still need to see that efficiency in the trading finality settlement of those. And we can't do that without a digital CSD. And it's exciting to see you there. I think, as you know, I'm on the board of Tokeny, where we created the 3643,
Yep.
and Inveniam is a part of that 3643 consortium. So we're very excited to see the industry maturing and bringing in, and also that we're seeing a lot of the different isolated silos, right? Hedera becoming EVM compatible, right? We're
Yep.
seeing a lot of these worlds coming together, and people realize this open source value, which is hard to overstate how important the creation of those that open source software on public chains with permissioned tokens can begin to interact and interoperate. But then also, when we start seeing these ETFs tokenized and trading 24/7, 365, that's going to be huge. And we start to see people who have illiquid assets and an enormous amount of their liquid net worth locked up, able to avail themselves of your technology and your services to begin to have those sit in funds and wrappers that can trade, or structured products that can trade in
Exactly.
this manner. Yeah, talk to us about where are we going to be in 5 years?
Okay. I think in 5 years, we'll be significantly up the J curve in terms of the adoption of digital securities. I think we will only be having natively digital issuances at that stage in major financial jurisdictions, because it's simply going to be a competition of arbitrage where I could have a non-native, I could immobilize the security, I could tokenize it, or I could have a new one created, which is the ideal world straight as natively digital. And in both of them, they could be a fraction of the cost and to the investor to settle post trade. And that then means that the immediacy of people wanting to invest, wanting to move assets around, and actually being able to do so cross border, becomes so much simpler. So for me, that's the first bit. The second bit is we're going to go to the next stage of the regulatory and the legal changes that recognize that the technology is 5 years older at that stage, 5 years more mature, and most importantly, the technology now is being understood for what it can do. Today, blockchain technology can already innovate the markets, and so can the financial innovation around the instruments that are being tokenized. But the regulation and the law and the acceptance by the politicians and by the public, and also the evolution of the intermediaries, is going to take that 5 years to get to a stage where we're saying, good, we're over that. And what we'll spend our time then is supporting the new, but also because we can handle conventional, that's about the stage that we start mopping up and saying, let's immobilize all of the existing securities that are out there, either in paper format or dematerialize. Let's immobilize it and freeze it. And then we'll only ever be working in a tokenized world going forward.
Yeah, and it is, we see that um, those steps where we're innovating on infrastructure today and we're laying this uh, capability for a networked function as the traditional world moves here. Um, and I think then we'll see a whole explosion of innovation and
Yep,
financial innovation and expansion into markets that have historically been very deep laggards in the form of data, in the form of liquidity, effective collateralization. That's going to get better risk. Uh, Risk premiums are going to trade more efficiently. So I think that innovation is going to explode on applications on top of the infrastructure that's being created right now.
that's it. I've got two quick thoughts exactly with you on that, Pat. The first one, when the European Union was building its capital markets union, it was realizing that there wasn't enough information getting out to potential investors around businesses. This comes back to your private market point. The current governor of the Banque de France wasn't the governor at the time. He was an advisor to the prime minister, and he was sent off to look, how are you going to do this? How are you going to improve it from a French national point of view? And he got together with Euronext, the exchange, and they, with the government, they brought in Morningstar to provide the equity analyst reports for some of the big industrial areas of France because no one was providing the equity analysis, so no one was investing. They turned that round, and that's where the likes of Inveniam come in with making sure that information is much more available. The second prediction, I predict, first of all, that that's going to really take off because nations are going to see the importance of getting that data out to the prospective investors, and that makes it easier for the private markets to get access to capital. The second one that I think will support that is whilst we'll see, and we're on the working group with the ECB about a wholesale CBDC, central bank digital currency, what we're going to see is the commercial banks' use of deposit tokens accelerate ahead of that. Because you've already got JP Morgan's JPM coin running on Onyx, which is accepted in Luxembourg as fiat. And the commercial banks are going to be in the vanguard of that, helping to support, because that also fits with what we're trying to do with private markets. Regulations are going to come under pressure, and the regulators will hopefully also understand and see that this is a very positive thing. It's not a threat, but it takes time. But that's what I see coming as well. Good times
Yeah,
ahead.
and the innovation in the currencies that are going to cause a decentralization and a distribution of risk away from central banks is going to be, I think, a great boon to the global economy. And I want to thank you so much for this conversation. What a pleasure to have you with us, Martin, and good luck. We're cheering for you. We're supporting you, and I can't wait to have you on again in 6 short months and hear about where you are and all the progress that you've made. So thanks so much.
Fantastic. Keep the good work up, Pat. Thanks, Invenium.
Thanks. Bye bye.
Cheers. Bye.